Hi everyone. Okay, let's cover exercise 5, preparing the statement of financial position for Cougar Inc. So you were given a list of accounts for Cougar, and if you remember, the three main areas on your statement of financial position is your assets and your equity and your liabilities. And of course, your total assets is going to be the exact same amount as your total equity and liabilities once you add those together. Okay, so that was from Financial Accounting 1. Now, in this course, as you've noticed, we've started breaking the statements down into more departments and sections. So the assets, as you can see here, we have assets and we have them divided into two different categories: non-current assets or long-term assets, and current assets, which is within the next year. They've also put in another category called intangible assets. Now, they haven't grouped those into your non-current assets. They've actually grouped those separately. Okay. So looking at our non-current assets at cost, so that would be property, plant, and equipment, or a building, or something like that, for a total of $300,000. Then we have to subtract off the accumulated depreciation. And if you remember, over the life of our non-current assets or our long-term assets, they don't hold their value forever. So we have to slowly expense that asset's cost. Okay, and that goes on depreciation expense on our statement of income, but then it accumulates year over year over year on our statement of financial position, and that's the figure accumulated depreciation. So now it's saying that our non-current assets have a value, a net value of $200,000. That's the amount that hasn't been depreciated yet, or the value that the company feels is still left in the asset. Okay, so then the next section is our intangible assets. That could be something like copyright. Then we have our current assets, okay? And our current assets, if you remember, is something that is going to change within a year. Most of them in less time than a year. So there we have our inventories, our trade receivables, or what we used to call accounts receivable, prepaid expenses, so expenses paid in advance, such as prepaid insurance. And if we haven't used the whole policy, then it still has value. So if there's, say, 9 months left on our insurance policy and it's completely paid up, then the prepaid expense or the prepaid insurance that would go on our statement of financial position would be that 9 months left. Okay, and then of course cash and cash equivalents. Another name for cash and cash equivalents you'll see in future questions called marketable securities. And those are investments that can be very quickly turned over to cash. Okay, so then we add up our total current assets of $185,000. And then for our total assets, we add the $200,000 from our non-current assets, the intangible assets of $20,000, and the total current assets of $185,000 to give us total assets of $405,000. Okay, so we'll move down to the equity and liability section. Okay, so for our owner's equity, the two sections that we are focusing on is the share capital, or the amount that we have sold shares for over the life of the organization, and we have sold shares and received cash for those shares of $100,000. And then we have retained earnings of $80,000, and again, those are earnings or from the statement of income that we haven't paid out in dividends to our shareholders, so we've retained them in the company. And that right now is a total accumulation over the life of the company of $80,000. So therefore we have total equity of $180,000. Now we're going to look at our liabilities, non-current liabilities, mortgage, because we know that a mortgage, it takes more than a year to pay that off. Long-term borrowings, again, indicating that it's not current, and future income taxes payable. Okay, so those are all indicating that it's in the future, not within the next year. So our total non-current liabilities is $160,000. Then we have our current liabilities, trade and other payables, short-term borrowings, accrued expenses. Those are, if you remember from back in Financial Accounting 1 or maybe even Financial Accounting 2, accrued expenses are expenses that we have incurred, but we haven't received the invoice yet, and that's why it's not considered part of trade payables. Okay, so that would be like receiving or not receiving your power bill because it only comes out every 2 months. So after the first month, even though we haven't received an invoice, we still have to put expenses through our statement of income, and then the other side would have to be set up as a liability, and that would go under accrued expenses. And then we have the current income, taxes payable, to give us a total current liabilities of $65,000. Then we have our 160 and our 65 to give us our total liabilities of $225,000. That added to our total equity gives us total equity and liabilities of $405,000. Hope this helps. Let me know if you have any questions. Thanks, everyone.